Okay, if you're trying to make sense of the real estate market right now, you are definitely not alone. I mean, it feels like every single headline is telling a different story, right? It's giving everyone from buyers to sellers a serious case of whiplash. And look, if you're thinking about making a move in 2026, you know the stakes are incredibly high. We're not just talking about numbers on a page here. For most of us, this is one of the biggest, if not the biggest, financial decision we'll ever make.
And that's because the data, well, it's sending some seriously mixed signals. But don't you worry, that's what we're here for. We're going to cut right through all that noise, look at the numbers, and figure out what's really going on. So let's just dive right into those conflicting signs.
So, here's the core issue. The market seems to be moving in two opposite directions at the same time. Seriously. On one hand, you've got a lot of good news, but on the other, there are some very real warning signs. It is, to put it mildly, a bumpy ride for real estate.
Okay, let's start with the good news, the case for optimism. Because there is some really compelling data out there that suggests the market is actually getting healthier. And you'll see it's pointing to a really big shift in favor of buyers.
So first up, let's talk mortgage rates. Now you might see that today's 30-year fixed rate is 6.09%. But the real story is when you compare it to a year ago. We were looking at almost 7%, a full point higher. That is a huge drop, and it makes homes way more affordable for a lot of people.
And it looks like buyers are definitely noticing. We just saw a massive 14.1% jump in mortgage applications in a single week. I mean, that's one of the strongest signs you can get that buyer interest is roaring back. People are finally getting off the sidelines.
You know, this quote from Sam Williamson over at First American really sums up this whole optimistic view perfectly. He says, the combo of lower rates and cooling prices is setting the stage for what he calls a more constructive year for homebuyers. It's a pretty hopeful outlook, right?
But that's only half the story. Just when things are starting to look up for buyers, the data throws us a major curveball. So let's flip the coin and look at the other side, which, well, it paints a much more cautious picture.
So check out this paradox. While mortgage applications are shooting up, the number of actual signed contracts, pending sales, is way down. We're talking a 9.3% drop from November to December alone, and year over year, sales are still down 3%. So, more people are looking, but a lot fewer are actually pulling the trigger.
And this isn't just a blip. This caution is being echoed at the highest levels. Just look at Fannie Mae's forecast for home sales this year. Back in September, they were predicting a pretty rosy 9.2% jump. By January, they've slashed that all the way down to 6.9%. That's a big deal. It's basically a vote of no confidence in a super hot market.
Mike Simonson over at Compass really captures this feeling of uncertainty. He says that even when we get a good week of data, any bullishness we see is probably very fragile. And that's such a great reminder, right? One good week of news doesn't automatically mean we're out of the woods.
Okay, so what's really going on here? We've got more people applying for loans, but fewer people actually buying houses. Optimism and caution living side by side. Well, this is where we connect the dots and get to the single most important trend that's driving this entire market right now.
Take a look at this number, 61. That's the average number of days a home was sitting on the market. 61 days. Not only is that a full week longer than last year, it is the longest it has taken to sell a home in about 3 years. This is a clear, undeniable sign that things are slowing down.
And when homes sit on the market longer, it creates this really powerful condition. It's called buyer leverage, and it's pretty much exactly what it sounds like. For the first time in what feels like forever, buyers, not sellers, have the upper hand in negotiations.
So what does that leverage look like in the real world? Well, this quote from a Redfin agent shows it perfectly. Buyers are negotiating prices, they're asking for repairs based on inspections, and sellers, they're actually having to compromise because their houses are just sitting there. The power has officially shifted, folks.
Okay, but that brings us to the big question, right? What is the fundamental reason for this huge power shift? I mean, why, after years and years of sellers calling all the shots, are buyers suddenly in control?
Well, the answer is good old-fashioned supply and demand. And this number is just staggering. In December, it's estimated that sellers outnumbered active buyers by 47%. Let that sink in. That is the largest gap between sellers and buyers since at least 2013. It's simple. There are just way more homes for sale than there are people ready to buy them.
Okay, so let's put all these pieces together. We've seen the mixed signals, we've seen the slowdown, and we've seen this massive imbalance between supply and demand. So what does all this actually mean for you? That's the big takeaway here.
So here's the bottom line. Those mixed signals we started with, they aren't really that mixed after all. They all point to one big, massive truth. The negotiating power has totally shifted from sellers to buyers. If you're a buyer, this means you have more room to negotiate on price, on repairs, on conditions, more room than you've had in years. And if you're a seller, well, it means you've got to be more realistic and flexible if you want to get that deal done in this new environment.
And all of this leaves us with one final, and I think pretty fascinating question. For the first time in a very long time, buyers are back in the driver's seat. So the real question for 2026 isn't just about price, it's about what else they're going to start demanding now that they have the power to do it.